guys, glad to have you on board again. Today, quick update. We're gonna do a global vision of the market because things are still pretty hard to navigate. Most importantly for those who have broad exposition to their portfolios, because of course it looks like there is some kind of correlation between the whole game, but still I can hardly express how complicated it is to navigate it, not to mention I'm personally totally fucking lost. And it rarely happens, but still at some point when chaos level just hits skyrocketing levels, this would just be absolutely stupid to try making sense out of it. That's the topic I've tried to explain with the weekly updates. It's really a blurry correlated context. So trying to make complex relationships into these complex environments would just be a waste of your time, because even I just can't do it. Okay, so if you're trying to make sense of what the stock market could lead the global crypto market to do, or if the crypto market is on the verge to bleed bath because of a stock market reverse and so on, well, things could turn out to actually be more complicated than that. So complicated that you cannot actually really profit from these correlation assessments. Okay, so this is first of all the conclusion we're going to get to, okay? Don't try to use correlated effects right now because it looks like they don't really make sense. They could turn out to change this, but right now it really is what I feel, and I'm going to try explaining how and why. So first of all, let's start with broad market lecture, S&P 500, H1 time frame, our reference time frame for intraday lectures, and well, good luck if you're willing to try trading any of those market conditions, because well, this is what we have at the moment. Oh, sorry about that. Okay, this is what we have at the moment, okay? Just pure and simply an astonishing lack of volatility. And, well, like I said, really good luck on trading these markets. Support contexts are not getting unfolded, which means we're getting into some irrational market pricings or late stages of trends, because, of course, this looks like a trend that has been going to really mature. This really looks like a pullback or whatever that is, but this certainly doesn't look like a market on the verge to accelerate, most likely the opposite. But still, this market is continuing to act pretty chaotically, which means late stage trending. Normally we should see some reverses, but instead of reversing, we see no volatility at all. So that could be the sign that something happens in the bigger picture, but all of those bigger pictures are still as blurry. So we're totally lost in here, and it's absolutely impossible to make any rational forecast. We're just waiting for volatility to emerge back into this market. And well, instead of having volatility early signs, we most likely have the opposite. So sure thing, I'd like to get volatility enough to be traded, to be able to trade these markets. But the reality is the market doesn't necessarily do what I want, and currently it just does not. So I'm patiently waiting, having to manage my risks, of course. That's what I explained into yesterday's daily update. But as of right now, additional informations that I need to process my decision over whether or not I'm going to invalidate my cover trades, well, I simply have nothing to deal with. Everything we're dealing with is just lack of volatility. So lacking of volatility doesn't mean invalidating. It just means I need information that I don't have yet. So patiently waiting out there. The cluster still stands for a very historically dangerous low of volatility in such a current context we have, but we might just be going for closing some gaps and so on. So there could be some technical reasons to be there, even though I doubt we can actually sustain prices really longer out there. We could still be dealing with a couple more days of very low volatility before eventually reactivating to the upside. I can definitely see that we've gone for 3 sets of waves to the downside in here, leading me to believe that this market cycle is pretty much over rather than the opposites. But as we are lacking of volatility, well, we're squeezing the momentum on the VIX, which means there's not enough movement in the VIX itself. That's what these things tells us. So right now it's goddamn hard to make a truly viable context lecture over this market, which simply lack of VIX movement. So the volatility itself doesn't move enough. The last time it happened, we've always built a market bottom. So it really leads me to believe that we're not going to stay there much longer, but it also tells us that it can last for a couple weeks. And in that perspective, things can turn out to be dangerous if you are really fighting against this market without enough experience. For the simple reason that in here, these contexts, first of all, are for experienced only. Trading reversals, it's definitely not something that beginners can try going down to, because it's simply so much complex. Then margin for error is just so big, you're just going to fall into each and every possible trap. There is no room for error into reverse trading. Most importantly, these reverses we are talking about are not major market tops. These are more likely intermediate market tops that will just push us right back to the early supports, which will very likely be bought. So there is absolutely no technical requirements for you to go down this road, despite being a professional investors who are managing the risks of their trends, which means we're covering partially the portfolio to try making some cash to buy again the next support. Well, we're doing advanced management, okay? So that's something I wanted to explain as well into yesterday's video. So very much likely the end of something, but this end could turn out to be low volatile for a few days. So if you're really going aggressively bearish with tight stop losses day after day, this is most likely going to be a pain trade for you. Just take the example of this, which is what happened in late August or early or entire August basically last year. So just bear that in mind and have a look at what the market did in this portion of time last year. It did this, okay? For the entire August, we've gone absolutely irrationally, stupidly bullish. So if that's what's on the verge to come, which I sincerely doubt is the case, what the fuck would it be to remain bearish in such a market? If we were copy-pasting this price action out of this, well, sure thing, that would look absolutely staggeringly stupid, but that's also the type of market in which you certainly don't want to be bearish. So going aggressively against these types of markets simply makes no sense. Things, and we know, can turn out to be absolutely stupid. All right? So it is a matter of volatility. There surely isn't enough yet, but also we have a limit to everything. I'm not going to let myself ride into such a thing. I accept a little bit of chaos, but there's definitely a limit for this. The market could just dry out of liquidity into kind of a 45-degree angle. That is what I think is the most probable thing to come. Just basically standing still and oscillating across this area. Okay, not really going bullish, not really going bearish, just basically trying to emerge early signs of recovery in terms of volatility, meaning the market breathes back life into its momentum rather than just destroying it, which is exactly what we're doing since we switched into April. So basically, early April trading is just an absolute lack of volatility and liquidity. So there's nothing we can actually process out of this market. But just to say, well, it doesn't mean anything yet. Things could change, but I would like to see volatility as of this. Okay, a bit of volatility, a slightly improvements in terms of volume dealing with, and that would be an early sign that the market is breathing back life. Okay, right now it just makes no sense, so don't try to make sense out of random market moves. Not enough volatility to give it any rational value, not enough volume to support it as well. So, well, just stand still and patiently wait for more rational pricings. When it comes to cryptocurrencies instead, also we're going to go for junk bonds. This is something I really bear in mind as of right now, because this is where we could get a third range boundary area, okay? So I still believe this is absolutely irrationally traded in terms of risk perception. Everyone is just irrationally bullish, but that's the current motive. That's the current mood in the general market. No one willing to profit take. Everyone wants to be on board because everyone feels to be FOMO trading if they ever get out. So right now, third range boundary area means something interesting in terms of true professional risk limitation will show up out there. So this is something you really want to have a look at. This is one of the additional information I haven't mentioned yesterday that I really want to add up to the mixture. This thing is definitely something I bear in mind. Whatever the professionals are going to be doing out there will matter a lot to me. If they actually turns out to reverse, will it turns out to be a neutral range? Will we actually manage to break the low points to eventually target the overlapping structure I'm forecasting for the S&P 500, and in that perspective, will the S&P 500 suffer from losses to do exactly the same and retrace right down to the last year's level, which still seems to be the most probable outcome for me. But of course, in here, same thing with 4-hour chart trading. We can definitely stay there for a few days, work around this area, and finally just sooner or later actually turn out to reverse. But until then, the third range boundary area is a speculative area. We already try to accelerate over this level, really looking like a range is going to build out there. I'm just patiently waiting to see if it's turned out to be true or not. And that would very likely drive a VIX reversal, but this is most likely, like we said, a matter of time. And we need a bit more volatility to be able to see something that values what we're looking at. In terms of bonds, bond market is slightly showing signs of deteriorations below the 1.75, but still a lot of people are forecasting probabilities to go right up to 2%. Mostly because, well, same old thing, just look at how we are pricing things into this market as we crossed over the 20-period moving average, which was seriously bearish. We just like cross it like it was nothing, not even pull backing over it. So you can be damn sure that we're going to get back to those levels in the future, not necessarily immediately, but those who are irrationally thinking that we're going to go straight line to 4% now, well, that's possible, sure thing, everything is, but this is definitely very less likely to be. What should very well happen out there is most likely drying out of liquidity because we have destroyed volatility, so we're going to have to restore decently tradable levels of volatility first, so kind of ranging into this area. We have a resistant context on top of our head. The 2% level mark could eventually be tried to be reached out to just for psychological levels, just if we want to trade above this level. So this could be the sign that the market wants to show signs of future improvements, but future, which means if we ever get down 2%, we're very likely going to consolidate later on. Okay, unless there is a big market explosion, which sounds pretty less likely. Okay, so oscillating out of this area to restore volatility is what sounds to be the most probable for this market. Okay, so we should stabilize out there. I've mentioned previously that I thought the market would be oscillating between 1 and 1.5%. Actually, turns out that this thing might have shifted it to the upside. So I'm still waiting to get the resistance and a mature range to settle where the value will actually be. And right now, I'm forecasting actually might be between 1.5 to eventually 2%. We're sitting right in between now, so I'm waiting for additional information. Okay, waiting for a range in here to mature into the 4-hour chart time frame reference, which is just right now totally out of liquidity and out of volatility. So, well, let it happen patiently, just like with the stock market, waiting to get movement to see that the market is rationally traded. Because right now, this is just feel like the market knows where to go. We know the future, we know how to get there, it's simple, it's easy. Well, we never know. So something's wrong. We need the market to price in the possible risks. Until then, cautious exposition to every global market scenario, okay? When it comes to cryptocurrencies, well, this is a complex mixture in here as well. The H1 timeframe range we are using as a reference for our charts right now is getting just over mature. This was our market top. This was just a slight resistance breakout attempt, not managing to set for value. So this is our market top. Wave 1, 2, 3, 4, 5, flat range, over mature, 6th range boundary going on right now. So we're getting on a mature range, which means you have to stop looking at this time frame as a reference. It doesn't make any sense. Now 4-hour chart reference is where we have to look at. And well, still looks like a bullish context to me, and I see absolutely no reasons to change my mind. The thing is that, of course, in here we have a much more complex issue to navigate, because fuck it, we've got another mature range in here. 1, 2, 3, 4, 5th. And well, what are we going to do? We're testing the previous 3rd range boundary, and like we said, are we finally going to manage breaking it, or are we going to validate the 5th range boundary, creating a 6th one? And in that perspective, we're going to have to stop looking at H4 time frame to go for the daily, and so on. Okay, so as of right now, 4-hour is a reference as long as we do not get there. If we get there, that means we have a mature range out there, and we're going to have to change the game. Okay, so right now we're waiting for the confirmation, the breakout confirmation of this previous third range boundary area, so this one. So we're waiting for this one to be broken up. And if such a thing happened, like we stated, we're pretty much at the end of something rather than the beginning. The breakout occurred long ago, so in here really much likely looks like a final excess. So this is the type of breakouts that doesn't last very long, and anytime we see a market breakout or something like that, is generally an area in which the market will lock on gains rather than accelerating. Okay? So bear that in mind. Very likely going to build a divergence structure in here. I'm just giving you kind of a clue. Okay, look at how they structure build. Once again, they build in odd numbers. Okay, so 3 is definitely the way to go. We've got 1 top, 2 tops. The third one is very likely increasing odds for reversals. So in here, as you can see, there's just a cluster that you might need to see. We're spending less time as we move on with the maturity of this structure. The first time we've built up resistance, we've spent kind of like 3 days in there. Second time, it felt a lot more like a bull trap, 2 days sustaining prices over the resistance and rapidly reintegrating. The next time is probably going to be even faster than that. So don't expect the prices to stay there for long. If we break the resistance over 62K, well, pretty much not going to last more than a day, okay? So bear that in mind. There's no rush to just get out when the market breaks up, but just don't last too long either, okay? Don't let yourself ride that trend for too long. Lock on the gains, either partially or totally, depending on your exposition. If you're using margin trading, seriously consider reducing margin expositions, okay? Because the maturity of this structure could cause the next support to be broken down, okay? That's pretty much all about it. Of course, whatever happens with the altcoins mostly depends on what's going to come with the dominance. First of all, with Bitcoin, and secondly, with dominance. Dominance still remains severely tainted to the downside. There's absolutely no early reverse signals on the daily chart. We're totally fucking up the context. Sure thing, we're getting closer to the weekly context, but still, well, there is no nearly a signal in the weekly chart in here as well. So everything looks still like there is a possibility to settle below this this previous support for a little while. It's not going to last forever, sure thing. We are reaching targets, so don't be over bullish on altcoins, but sure thing right now, this is where the action takes place. As long as Bitcoin doesn't close the door. Remember that if Bitcoin starts breaking support, altcoins will probably suffer quite a bit. Okay, then for the rest of it, USD WTI. Well, still working exactly as we thought it would be. The daily chart has been totally fucked up in terms of market pricing. We've gone on a washing machine pattern, no volatility, no liquidity. We're just going to do the exact same stupid opposite, meaning that we have inched one way down, flat, and we are on the verge to inch one way down again. Very likely with the same timing as the stock market, but as we said, damn it, the timing is so hard to figure out in those markets. So don't anticipate nearly next breakouts on USD WTI can extend for more than you think. This is more like the timing is probably going to come out of nowhere, and it's definitely hard to give it a plot. Okay? XAU, XAG, they're starting to reverse, pretty great. We've got early signs of recovery. This is totally positive. Trend follow on these guys. I am right now on XAG. I still have trades on XAU, and I'm going to reinforce sooner or later, but I mostly want to have exposition to this guy rather than this one. We've already been talking about it, or otherwise I would detail it later today. We're going to go for a live room session this afternoon, so if you can settle in, join us, and we can discuss these things in greater details. When it comes to Forex, and we're going to terminate with this guy, same thing as all of these things, early signs of recovery. Euro dollar is reversing, just like I said. I don't know how stupid people can turn out to be. They were heavily bullish on euro dollar, and then they turn out to say, oh, finally, maybe the dollar could be stronger than anticipated. And now that it reverses, they say the dollar is bullshit again. So they're just basically, oh, God damn it, just I can understand that. So, of course, dollar will keep deteriorating. That doesn't even, this is not even a question to me. It's just sure thing we have settled for a major decade-long market bottom out there. So I am buying into this market. It's not even a question. So yes, I'm bought into the euro dollar, trend follow stuff. Sure, it could go lower. It could go hit the moving average eventually, and I will then stop and start again. But I am only looking at bullish entries on Eurodollar, just like I'm only selling the USD GPY. GBP USD, I still want to stand and stay away from this guy. I just don't know where to do with it. As long as right now. AUD NZD, my trade of the year, still going freakingly well. We've built and bought a major low point in here, right in the context with bullish trend signals and stuff like that. Really, really great, meaning that we're very likely building a bullish range in here. That seriously increases odds for the market to go for the resistant context, building an accumulation which is not mandatory, but very likely going to happen, and eventually in the future breaking out of this motherfucking range to trigger the trend. So this is the trend I'm waiting for like 4 or 5 years. Eventually it's going to come, or maybe it will never come. Of course, nothing is ever for granted, but in here the technical structure seriously improves. So it gets better and better as time passes. Of course, it takes time. This is suddenly it is an exotic traded pair, so this is not something that triggers like shit. Okay, so it's gonna take more time to accumulate and so on. But for all of you guys that are getting yellow level right now, intermediate trend following stuff, this is definitely the type of asset you want to bear and have a look at on a weekly basis. Okay, just have a look at this once a week. But don't forget about this one. This is where you're going to get probably very, very, very educational purposes, accumulation trades, whatever. This is where you'll be able to see how trends prepare. I can't say for sure a trend will emerge out of this, but there is very likely probability for this. Okay, so you'll be able to see early trending activity, which can be very educational for you, yellow guys especially. All right, that's pretty much all about it. See you guys later in the live room. Sorry, it was a long shot today, but I really wanted to make that broad global market update.